Radio for today, the 24th of April 2021. It's good to have your company, and we're going to start off with a macro market overview with our macro market expert, Julian McCree. Julian, coming to us live from Auckland, New Zealand. Julian, it's been an interesting week for macro stuff. What have you got for us this week?
Hi Paul, hi everybody. This week I'm trying to find, and I have to admit this, it's the end of the month, right? So what normally tends to happen at the end of the month? So generally speaking, in this situation, we find the stock markets normally at the end of the month tend to trade reasonably well. Offsetting that, we have a number of important key technical levels coming up in the markets in the S&P and also in the NASDAQ and the Dow Jones. You know, we've got quite poor breadth in the NASDAQ. The S&P is doing sort of okay. The Dow's not doing too badly. But I'm quite concerned really about the way in which the overall US stock markets are trading. You know, you guys have already heard my views around this a couple of times on this show. I think somewhere around about these price levels, somewhere between 41 and 4,200 on the S&P, I think we're going to take a pause at least, and maybe set back for a little bit in a correction. I guess really for me the big news is what's going to happen next to our favorite currency of Bitcoin, and actually some more of the crypto market. So last week we saw two things happening. We saw a general fall in the crypto markets. Volatility began to pick up, not surprisingly, as the markets began to fall away a little bit. We saw Bitcoin get down, I think, on its way to quite an important level. I think probably the middle of the week might prove to be better from a timing perspective in terms of a potential bottom. But maybe we hit it over the weekend at that 47,000, and maybe we go and revisit that. I'm not sure. Maybe Shukri has a bit more of an angle on that, but I think 45,000 for me is a bit of a line in the sand. If we can't hold that, I think that the Bitcoin market for the time being is probably going to continue its downtrend to who knows where. Don't forget, it started the year at about 30,000, I believe. So it pretty much went doubled over the course of the first quarter. So a setback isn't unreasonable. Certainly a setback since the rally it's had since August. Is not unreasonable at all. So the question we all have about the cryptocurrencies, is this a correction or is this something more meaningful? We're obviously never going to know. We don't know until after the event has unfolded. We tend to trade it as we see it, but there are going to be some key levels, and obviously somewhere around 45,000. And as I recall from our previous analysis as well, too, 32,000 is a pretty key number. And heaven forbid we go even lower, then I think 26,000 is also a big number as well too. And again, in Ethereum, we got down to we set off from about 1,600. That's going to be incredibly key, with probably some support around near-term support around the 2,000 mark. Again, Shuki might have a slightly better angle on that than I have, but let's bear that in mind. It was a bit of a rough week, I think, for the cryptos last week, and the technical pattern doesn't look quite so hot now on the daily and weekly charts. So we'll see, looking for stabilization there. I think when you look around other markets, there's been some things happening, but really it's been a bit of a consolidation in the interest rate front. That interest rate, the long-term interest rates in the States and pretty much everywhere else have either fallen or stabilized at the current levels. And I think that's given a bit of a bid to the gold market. We've seen that trade okay last week, and I expect that to continue. You heard, for those of you on Trader Cafe, and Ainslie will talk about this later on, there's some quite key technical levels that if the market does go back to revisit will probably be quite good buying opportunities. It's at the moment in a short-term bull trend, which I think really is probably something to do with that interest rate environment that we've seen that's been fairly benign, and yields have been falling for the last couple of weeks. Now, what's interesting about that, and they may well start to rise again briefly, but if you look at some of the commercial positions that we're seeing on the COT report, and Ash possibly will speak about that later on, you can see significant commercial long interest in some of those interest rate markets. They're expecting yields to continue to go lower. Certainly the short interest positions from the small speculators is somewhat extreme. Reflecting really the sell-off in bonds and the rise in interest rates over the course of the last 3 or 4 months. And I think that actually is probably as much of a contrary indicator for where interest rates are going to go as you're going to get right now. And so I would view this as being a good environment for interest rates. And if that is the situation, that interest rates stabilize or fall slightly over the course of the next few weeks, especially if asset prices start to move down, then it wouldn't be too surprising to me to see gold being the outperformer of all of those. And we'll have to see what happens around that. Now, there is some more news I think over the weekend around the oil market. When I look at the oil market, I'm always I'm always a little bit in trepidation about trying to figure out what's going to happen next with oil. I think above $75, $80, anything is possible that we could get up there. But the supply situation is considerably different to the last 5 or 6 years where we've seen similar prices in oil above the $70 mark. There seems to be an overhang of supply in the market right now. We really haven't seen that full economic growth pick up post the COVID environment. And as a result of that, I believe there's something like 11 or 12 million barrels a day of potential surplus oil able to be brought onto the market, which clearly will be a bit of an overhang for the oil traders. That doesn't mean to say the market might not go up, but will it stay up, I think, is probably more of a key question. So my view on oil remains long-term bullish. I see oil north of $80, $90, $100 even as we go into the early 2020s. You know, this is just getting started now. And I have a fundamentally bullish position on oil. But right now we've come an awful long way in a relatively short space of time. And I think that's probably the story, to be honest with you, with a lot of asset markets out there. If you look at the copper chart, if you look at charts of some of the grain markets, if you look around at a lot of the different asset markets, we're seeing those supply chain shortages really force up prices. Lumber would be the poster child, I guess. If you think there's been some rallies in Bitcoin and some of those digital currencies, go check out a lumber chart. It's gone completely bananas. And there's been a pattern repeated, I guess, around the world in terms of commodity price rises on the back of possible supply constraints. Now, the big question is that short-term inflationary, long-term inflationary? People believe it's more long-term inflationary. I'm still falling into the camp of short-term. For me, it's just about the supply constraints. They will be eased at some point in time, possibly when the pandemic begins to ease along those lines. Sure, things are going to be more expensive, but I don't think inflation is sustainable until we see a sustained economic recovery. But maybe I'm wrong about that. We'll see what happens over the course of the next 6 to 12 months. But I think that really is is the core of my arguments at the moment. I'm concerned about a lot of people buying into the long-term inflationary outlook being pretty bouncy, pretty volatile from here, and maybe that's going to be the case. I still think it's a case to be proven right now. I worry that this is just a short-term thing, which is going to, as the central banks say, go away. And if that is the case, then interest rates right now are about right, and they probably shouldn't be an awful lot higher. They certainly shouldn't be the 2 to 3 percentage points higher that some people are suggesting for long-term interest rates. And that would, in my mind, convey quite a bit of damage to the markets, having interest rates double from where they are now. I think that would be a very bad scenario. So yeah, look, I think there's going to continue to be a little bit of vol. I remain concerned about stocks. I think some of these asset prices have got a bit overdone. We'll start to see them come back. And as far as the currencies are concerned, the euro's, I guess, stuck in a relatively short-term pattern, bouncing between 123 and 117, and we're stuck here right about the middle of that. It's been a short-term bullish trend. Is that going to continue? I'm not too sure. Similarly with dollar yen, I'm not too sure about how long this fall in dollar yen is going to continue. Again, I think it's a function of these asset markets in the States, and if people decide to sell something, then you tend to sort of head home a little bit with your money, and that might cause a rally in the yen, a fall in dollar yen. We'll see what happens. So right now, for me, I'm playing a watching game, seeing what's out there, seeing what's going to tweak my interest about what's happening. I think for me it's a stock story, and the reaction of the US stock market to the next couple of weeks of earnings reports and other technical benchmark timings is really critical for me too. There's also some fundamentals around potential tax selling that people need to do over the course of the next 2 to 3 weeks following that potential capital gains increase that was announced by Biden. What's going to happen there, and what does that mean? It'll no doubt get watered down, but it still could be pretty dramatic. So a few things out there right now, but they're sort of like grey clouds, nothing black that I see. We'll see what happens in the price action. So for me, good luck everybody, and I hope you enjoy your week's trading.
Mate, can I ask you a question before you go?
Sure.
Mate, we saw the first long-term retail interest rate rises in New Zealand this week. ASB pushing up the 5-year interest rates. Got to say I wasn't too pleased about it. A bit of a sign that the markets are starting to price in recovery. No.
Look, I'm going to sum it up like this, Paul. Quick bit of math for everybody, right? Interest rates at 2%. Let's call them vaguely 2%, right? It doesn't matter. Interest rate of 2% going to 4 means your mortgage costs double. I don't think there's a family in New Zealand that could afford a doubling in their mortgage costs. So for me, higher interest rates in New Zealand is just a smokescreen. I think it's a short-term view reflecting maybe a rise in those medium-term interest rates that I don't think will be survivable. And New Zealand certainly couldn't raise their rates on their own. Otherwise, the currency is going to go to parity with the dollar. It'll just fly. And I don't think the central bank or the government, or in fact any exporter for which New Zealand is famous and is a primary exporter, wants any of those things to take place. So logic would suggest that that's not going to be the case. We'll probably be last guys off the rank to raise interest rates. I am unconvinced about a rise in interest rates being at all sustainable in this environment. I think they stay low for a very, very long period of time, regardless of what the inflation rate is.
So, mate, ASB pushed their mortgage rates out on Friday.
Yep.
But long-term only, right?
Yep.
So central bank will stay where it is, and that'll keep 1, 2, and 3 year rates in tight, right? But the 5 years going out surprised me.
Yeah, look, maybe they just don't want to build their book, right? I don't think anybody else followed suit right now. It could just be they don't want to build their book anymore and they've got enough.
Yeah, fair enough. Okay. Cheers, Julian. As always, thank you very much. Loved the trader interview beforehand, and I think we're working on a pretty special guest for the next one, aren't we? 2 weeks away. Hopefully we'll get some more information about that coming out. Remember, guys, every 2 weeks, Julian is on with a trader interview, and in between he's either doing some work with our staff or with the clients. Make sure you join us